Hi, everyone. Today, let's talk about the upcoming earnings. Then we'll go over the calendar for this next week. Then we have to go over the economic calendar because it is a big week this week. And then we'll go over the charts. And we'll finish up with my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single week, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So earnings season is coming next week, and we need to be prepared. They say with a slowing but growing job market and a tick up in participation and a downtick in wage growth, all of these things are pretty much in line with what the Fed wants to do. So those are all good indicators for the future economy and hopefully a slowing of the Federal Reserve interest rates. Mentioned here, it makes the soft landing that we've been talking about almost seem positive because all of these things are in line with what the Fed has been saying they are trying to do. We're not seeing that wage price spiral that we've been talking about. Wages aren't increasing as much, and inflation is also starting to come down. Both things, like they say here, are bullish. They also mention here that gold is looking good. We've talked about that several times on the channel. Gold and the gold miners ETF both look strong right now. They also mention here that banks have been the strongest out of the group, beating the Dow, S&P, and the Nasdaq up 2.5% this year. They mention that inflation is starting to go down, which is obviously good and should help calm down the Fed. They talk about the upcoming earnings, which we'll go over the calendar, but we have JP Chase, Bank of America, United Health, and Delta Airlines kicking off the earnings this week. And they say here, if you are expecting good earnings, in aggregate, S&P 500 companies are expecting their earnings to decline by 2.2% after growing about 4.4% in third quarter and 8.4% in second quarter. So we're expecting earnings to slow down. Seems like everyone keeps talking about this. It was inflation, now it's earnings. Inflation seems to be somewhat calmed down. So now we're looking at earnings as the next linchpin to see if earnings are going to decline and by how much. And this earnings season will be pretty critical. I do expect this earnings season to be quite good overall. I think it's a little bit overblown that we're going to see earnings decrease pretty aggressively this quarter. And I think second quarter is really going to be the bigger indicator of how the economy is doing going forward. Moving over to analysts, they say they expect S&P earnings to go up by 5.6% for the entire year, and revenue is expected to increase by 4.1% year over year. It's also worth noting that some sectors expect to go down quite a bit more. They say materials are expected to go down by 22%, advertising spending down by 21%, and consumer discretionary down by 15%. Overall is not too bad, but certain sectors are definitely going to get hurt more than others. Looking at that calendar for next week, there's pretty much nothing up until Friday, and then Friday's pretty big. You have Bank of America here, Citigroup, Delta Airlines, JP Chase, and United Health, as well as Wells Fargo. All very big companies and definitely worth paying attention to on Friday. Doesn't mention if these are before or after market hours, but either way, on Friday, we're going to see all of the earnings from these companies. Moving over to the economic calendar, it is another big one here on this as well. We have 1 year and 5 year inflation expectations. So by year 5, they expect to be back down to that 2% rate. In year 1, they expect to be at 5.2%. Then consumer credit, fairly interesting. But the big thing here is Thursday. We have CPI, core CPI, CPI year over year, and core CPI year over year. And then CPI excluding shelter. So all of these obviously are going to have huge impacts on the markets. CPI is expected to be 0%, which would be very interesting. Core CPI 0.3%, CPI year over year at 6.6%, then core CPI at 5.7% for the year. So if we do hit these targets, that would be really bullish, I think. The markets were pretty happy that we met these last time. And if CPI is good, we should expect the Fed to do 0.25% raise or 25 basis points. And if we overshoot these, I think there's potential that we could get no raise in February. Might be a little optimistic, but it's certainly worth thinking about. We also have the federal budget here continues to tick up at minus $69 billion compared to minus $21 billion last month. And then on Friday, not a lot of stuff here, but we do have import price index expected to go down. And then we have the University of Michigan consumer inflation expectations for 1 year and 5 year, which is pretty interesting. They expect the 1 year to be better than the Fed, but the 5 year to be a little bit higher than what the Fed was saying up here on the New York Fed expectations for inflation. Moving over to the charts, I did finally pay for TradingView, so we can do 2 charts at the same time, which is kind of nice, but it helps give some perspective here. So what we have is the daily chart on the left and the weekly chart on the right here for the SPY. It's worth noting here that on the weekly chart, we do have declining momentum. We did go flat from week to week here. Might get a slight tick up on the weekly chart for next week. It was pretty bullish going into the end of the week, which you can see here. We were flat all week, and then we had that huge big green day to close out the week here. And you can see that momentum on the daily chart building pretty much since December 21st. We had a big green day that day, went sideways throughout, but momentum here was building, and we're going to get the cross, looks like, on Monday, which should allow for quite a bit of a build. We're still looking at gap resistance right at about $400, just short of that. It's also worth noting that we are pretty much at resistance here from 31 October, which you can look at on the weekly chart, was the high right at the 21 going back to October. You can see that on both charts here. That resistance, I would expect we'll get some rejection off that resistance to start the week, but I think we'll find buyers pretty quickly. If we go over to the daily chart a little bit closer, bounce off the 144, come back probably down to 385 or so. Some buyers will come in at that point, and then we get the acceleration back to fill those gaps right here, somewhere in the 395 to 399 range. I do expect that to happen fairly quickly. It should all happen before we get into CPI. I expect to be right at resistance by the CPI announcement. That kind of seems to be their MO. They come up right to resistance, and once the CPI data all come out, it'll either push us through that resistance or it'll give us a fake out and we'll get the continuation to the downside. If we do get the continuation to the downside, I do expect that to be very aggressive. If we go over to the weekly chart, you can see what those goals are. Probably going to come back down to that 355 zone and retest that previous bottom. Or we could potentially double bottom at this point and create that kind of inverse head and shoulders. We have a left shoulder here, that head, come up, get that right shoulder, potentially a little bit higher, maybe at 365. And then we start to build a little bit of bullish momentum if the CPI is good and the Fed starts to slow down. But those are the two scenarios that I'm looking for. I don't expect that we're going to break outside. I think we're going to fill gap resistance right up to CPI release. The CPI data will come out. I expect to fail and create either a right shoulder or a double bottom. I don't think the CPI data will have enough momentum to push us to new lows that quickly. But of course, anything is possible in these markets. Moving over to the NASDAQ, you can see here, similar thesis. We have bullish momentum on the 4-hour chart here to the left. Through the 50 level, looks very bullish. Could certainly come up just a little bit higher, up to resistance at 274. Maybe we get a bounce back down to where we are right now at this level of resistance at 269 before we get a little bit of a continuation into that Thursday release. We also have gap resistance up here all the way at 286. That'd be a pretty strong push. We'd definitely have to go really quick. That's about 20 points right before Thursday, so that would be quite a push. Would take a lot of momentum. You can see here momentum on the daily chart is strong. We do have higher lows forming on the RSI, so it definitely looks bullish. Higher lows here on the 4-hour as well, so it looks strong. Should expect this to continue to the upside. Again, maybe a slight pullback early on Monday and a continuation just to build a little bit of momentum into Monday and Tuesday. But either way, this looks very strong. We've been talking about bullish momentum for a while here, and it looks like we're starting to get that initial push into the CPI and earnings season. Moving over to the IWM, this was actually giving you better indicators here. You could see on the 4-hour, we were getting consistent lows here. You can see what that looked like on the daily chart as well. Momentum was building to the upside here, consistent downtrend. In negative momentum, we did have that one day where we pushed down pretty strong, got a decrease in RSI and an increase of downward momentum. The next day was very bullish, and then we continued in that upward trend. Gap resistance here is at 180, so not a lot of upward potential here for the Russell, another $3 worth. Could certainly push a little bit higher than that, maybe up to 184 or so if this bullish momentum continues. But it's not as far off of gap resistance compared to the NASDAQ or even the S&Ps. Moving over to the Dow on the 4-hour and the daily, very similar to the Russell actually. Already pretty much at gap resistance, going to fill that gap, come up to 340, another $4 of upside. Doesn't take much to fill that gap. I do expect it to rally potentially a little bit more than that here on the Dow, just because it has been so strong. You can see we got just below the 50 on the daily RSI, and we came back through it to close out the week. You should expect this to continue going into the next week, at least until the CPI data. Moving over to Apple on the 4-hour and the daily chart, you can see we had that downtrend resistance, which had been holding pretty consistent, tested on 20 December, as well as once again on 3 January. And then we had the candle break going through it here on Friday, came right up to it, candle rolled over, and then we pushed through it all the way up to the 55 EMA on the 4-hour. You can see that slight break that we got here on the daily chart. Should certainly expect this to come up at least to the 21, which would be around 133, 134. but we have gap resistance sitting all the way up at 143, so that would be a pretty big rally here for Apple. It's got a lot of ground to cover before CPI, so I expect that to be pretty aggressive. I do expect the NASDAQ to be pretty aggressive going into the next week. If we get any kind of down moves, I expect that to be met with buyers, and that's no exception here for Apple. Moving over to some ratios, this is the NASDAQ divided by the Dow Jones. You can see we had a big bump here from September of 2019 all the way to the highs here on December of 21. Since then, we've been in a very consistent downtrend. On this, you can see the 144 has been a consistent point of resistance, which was the highs here in April of 22 as well as August of 22. Very good indicators of downward momentum continuing. And then you can see here, we did get below support here. I would expect this to rally. You can see on the daily chart, we've been going sideways. Negative momentum has been flat. Should expect this to bounce up. You can see we also have divergence here on RSI. We are oversold here on 27 and 28 December, and everything is still pointing to bullish momentum. It's good to see the NASDAQ potentially looking to outperform over the next 2 weeks. And that's usually a good indicator that we're going to see that bullish momentum continuing into the next week, maybe 2 weeks. Similarly, on the NASDAQ divided by the S&P 500, you can see we came into that support zone. Once again, supported here on 4 November, bounced. Same trend line, supporting here on 28 December, and then once again here on 6 January before we got that big bounce. Currently sitting on the 21 EMA, and you would expect this to bounce at least into the 288 zone. Got quite a few gaps on looking to be filled, potentially pushing back up to the 2.94 zone to fill all of those gaps on this down move. Before we get the continuation to the downside, this still is a downtrend and you expect it to continue here, at least in the short term. But like I said, significant number of gaps and some short-term bullish momentum here. The last time we came into this trend line, you can see the huge jump that we had. We do expect that to play out once again here. Moving over to the 50-day moving average chart, you can see we're surprisingly pretty strong here. So we're up above the 55 EMA already, which is pretty much where we ended that September bounce on 8 September. You can see we had 2 more days of bullish price action to get above the 21, but we're not really comparable here because the 21 and the 55 are really in the same place versus what we had here before. So the 55 was much lower, 21 was higher here on that September move down, and then the dead cat bounce that we did get. It's a little bit stronger here. It's worth noting that there are more stocks participating earlier in this bounce, and the momentum to the downside was not as strong. You can see here on this dip, we got all the way down to like negative 5.93 versus the 7.27 zone that we got to last time, maybe 7.5. So more negative momentum on that initial push. Stronger bounce earlier. Certainly seems like we could get 2 more days of bullish price action at least here, but it's worth noting the differences. It's also worth noting that we did not get the crossover on this August dip. We came pretty close, almost got across on 12 September, but it seems almost inevitable that we're going to get across next week. And then we'll get a lower high here on the MACD, and then we'll get that continuation to the downside. On this chart, that should be a pretty good indicator of when we're going to start moving down, and a little bit of a leading indicator to show how strong this down move is going to be. Moving over to DXY on the daily and weekly charts, it's worth noting that momentum on the weekly chart here is fading slightly to the upside. I don't think this is going to stop until we do get oversold conditions here on the weekly chart. You can see we were overbought on the dollar on the weekly for so long. It just seems inevitable that we'll get that oversold condition on the weekly. It's usually more likely, in my opinion, based on what I've seen, that we get overbought conditions, then we get all the way into oversold conditions. Just kind of seems like a pendulum that way. And I definitely think that's going to be the case here. So momentum still to the downside. It is fading slightly, so it's worth paying attention to, but I expect that to reaccelerate here in the next week or two. And then looking at the daily chart, you can see we did have really bullish momentum for a little bit. And then we had that big down move on the last candle of the week where the NASDAQ rallied really strong. All of the markets really did, but the NASDAQ was the strongest. And we're right at support here. So you would expect this to break through if we're going to see stocks continue to rally. And then if you look at the weekly chart, you would expect this to come down to about 101.50. That would be the next level of support. If we do come into that 101.50 zone, I would expect it to pause there, waiting for that CPI data. So we get the move down right to support. CPI data gives us that direction, whether the dollar is going to rally from that point, if inflation continues higher and the Fed continues to stay hawkish, or if inflation comes in lower, then you would expect it to break that support and continue down, giving equities a little bit of room to rally. Moving over to J&K, this is something I definitely should have been paying closer attention to last week. Unfortunately, I wasn't making videos and I wasn't going too in depth as much as I should have been last week. And you can see here, J&K has been pointing out the up move really strongly. On the 4-hour chart, you can see we had this big V-shaped bottom, and then we rallied really consistently, filling almost all of those gaps. Gap resistance still sitting at 92.70. We filled that gap on the wick here. So this could certainly sell off maybe a little bit next week. We did fill the gaps, so potential for a slight retrace on J&K. But otherwise, this looks very bullish. You can see momentum very strong down steps. Got into bullish momentum here on Friday, crossed the 50 really strong, continued higher. Worth noting, we're almost overbought here on the 4-hour, so really strong up move. Not overbought here on the daily chart, so if we do get into overbought conditions on the 4-hour, could slow down until we get that overbought on the daily chart. But like I said, I don't expect any major moves until CPI data. This should continue to rally, continue its direction once we get CPI data, and then we'll get that either continuation or down move, depending on what CPI gives us. Moving over to TLT on the 4-hour and the daily chart, and it seems like it found some legs. So we found a solid bottom, double bottomed at that level right at 99.50, and then we rallied up from there all the way up to gap resistance at 105.20 or so. You would expect this to continue to rally and fill these gaps. If inflation comes back pretty calm or as expected, then you would expect bonds to continue to rally. Also worth noting here that this is a pretty good setup. We came below the 50. Double bottomed, got a slightly higher low here on TLT, and then we rallied through the 50 line, and you would expect this to get back to overbought conditions on the daily chart before we see any kind of retracement. Also, the momentum looks very clean here, consistently down stepping, and you would expect that to continue until we get at least into the 1 zone here on the MACD on the bullish side. So not much to say, very strong, went lower than expected in my opinion. And then we got the up move and the continuation to the upside. And if CPI comes out at expectations, like I said, I think this will go higher, probably break through the 144 on the daily chart. Now have a solid double bottom set in and a higher low set in here at 99.50. And you would expect this to continue really strongly to the upside. Moving over to the VIX, finishing up here with the charts. Not a lot to say here. 4-hour has been very sideways. Even the daily chart's been very sideways. We continue to stay in this range from about 23.15 all the way down to about 21. Like I said, I do expect a slight retrace Monday, maybe into Tuesday. And based on this down move on the VIX here, that's certainly possible. Does seem a little bit extended. If we jump this left-hand chart down to the hourly, you can see we're oversold on the hourly. Momentum starting to tick to the upside on the hour. If we do get a slight retrace, maybe into this 22 zone, gives markets a little bit of time to cool off. You see the VIX cool off and equities start to rally. Does seem very consistent with the thesis. But overall, the daily chart is giving us that momentum. We came up to the 50 RSI, broke it slightly, and then we had that tick down. And then this should continue to the downside after we get a slight retrace, in my opinion. Moving over here to my accounts, you can see I did not do great on the first week, lost just about 2%. I really wasn't paying as much attention to the markets as I should have been. I definitely shouldn't have been as aggressive trading either. So you can see I started off the year pretty bad, but I think we can make this up pretty easily going into the rest of the year. And then looking at my positions here, I have 2 puts on the IWM. One's a put spread and one's a naked put. I do expect these to do quite well going into Monday, and they'll probably expire worthless in my opinion. If we do see some negative momentum, I might take these off a little early and see if I can reset these positions just to maybe profit a little bit more. I did add some money to my IRA for this year already, so I might start to transition to a NASDAQ position just so I can get everyday options on this account. But I'll pretty much trade it in the same way I've been trading. And then you can see here, I do have 300 shares of NASDAQ and 3 covered calls here, so very bullish. Already made up quite a bit of losses, so you can see here I had really $900 worth of open profit, and I'm still down $2,000, so that just speaks to how poorly I was trading last week. But hopefully we can transition that to a little bit better trading going into the early part of the year. I do think we'll get a nice strong rally and should be able to make up this position plus some going into next week, and then we'll see what we get on CPI. For everyone who was following my channel and saw my episode on Friday, in the early part of the week, I am back to everyday videos when the markets are open. So I am back from my vacation. I plan to put out videos every day that the markets are open and give my short-term analysis and my positions for upcoming weeks. So definitely hit the bell so you don't miss out on any of those videos. And of course, like and comment on this video. Let me know what you think the markets are going to do and what you think CPI is going to bring. And how do you think earnings are going to be for Q1 of 2023? Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.